Ladies and gentlemen, good day and welcome to the Supreme Industries Q4 FY24 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Aseem Bharde from DAM Capital Advisors. Thank you, and over to you, sir.
Thank you, Rio, and thank you everyone dialing in to Supreme Industries Q4 and FY24 results call. Representing the management, we have Mr. M.P. Taparia, Managing Director, Mr. P.C. Somani, Chief Financial Officer, and Mr. R.J. Sabu, Company Secretary. I hand it over to the team for the initial comments on the results. Thank you.
Thank you very much. I am M.P. Taparia, Managing Director of the Supreme Industries Limited. I, along with my colleagues, Sri P.C. Somani, Chief Finance Officer, and Sri R.J. Sabu, Vice President, Corporate Affairs and Company Secretary, welcome all the participants who are participating in the discussion of the audited standalone and consolidated financial result for the quarter and year ended 31st March 2024. The standalone results and the consolidated results are already with you. I will give brief on company's product operating performance and other highlights. The company sold 195,369 tons of plastic goods and achieved net product turnover of rupees 2,979 crore during the fourth quarter of the current year against sales of 147,414 tons of plastic goods and achieved net product turnover of rupees 2,566 crore in the corresponding quarter of previous year, achieving volume and product value growth of about 16% and 37% respectively. The company sold 639,701 tons of plastic goods and achieved net product turnover of rupees 10,022 crore during the year under review against sale of 506,501 tons and net product turnover of rupees 9,066 crore in the previous year, achieving volume and product value growth of about 26% and 11% respectively. The consolidated operating profit and profit after tax for the fourth quarter of the current year amounted to rupees 531 crore and rupees 355 crore as compared to rupees 529 crore and rupees 359 crore respectively for the corresponding quarter of the previous year. The consolidated operating profit and profit after tax during the year under review amounted to rupees 1,654 crore and rupees 1,070 crore as compared to rupees 1,353 crore and rupees 865 crore respectively for the previous year, recording increase of 22% and 24% respectively. The business scenario of all the product segment of the company for the year ended 31st March 2024 as compared to the previous year has been as under. Plastic piping system business grew 34% in volume and 15% in value term. Packaging product segment grew by 8% in volume and 7% in value term. Industrial product segment business grew 5% by volume and decreased by 3% in value term. Consumer product segment business remains flat in volume and decreased by 1% in value term. The overall turnover of value-added product increased to rupees 3,737 crore as compared to rupees 3,329 crore in the previous year, achieving registering growth of 13%. The company has total cash of rupees 1,178 crore in the books as on 31st March 2024, as against cash surplus of rupees 738 crore as on 31st March 2023. The company planned capex of around 1,500 crore during the year, including carry forward commitment of rupees 496 crore at the beginning of the year. The capex is planned for brownfield expansion of capacities and introduce new range of products across all segments. The capex plan also includes setting up plant at Kanpur in Uttar Pradesh, Patna in Bihar, Vijayawada in Andhra Pradesh, and near JNPT port in Maharashtra. Entire capex will be funded from internal accrual. Business outlook. The Indian economy has achieved highest growth in the previous year compared to all advanced economies of the world. Monsoon for the coming year is expected to be higher than normal, which augurs well to contain the inflation. The governments are taking several initiatives to boost manufacturing. The country's GDP thus may grow higher than previous year. Central and state governments are taking several initiatives towards creating improved infrastructure to provide houses for all and supplying gas to households by piping system, which will further boost the demand for complete products. In India and several surrounding countries, expansion of plastic raw material production capacity is under execution. In the forecasted slow growth of world economy this year, combined with increased availability of plastics, will maintain the price level at affordable price level. In the current year, that is 2024-25, plastic piping system business will thus grow by 25% in volume, and overall the company expects to achieve 20% volume growth in the fiscal year 2024-25. To meet the growth in demand for piping products, the company has initiated steps not only to do brownfield expansion at existing manufacturing sites, but also initiated action to put up new plant near Patna in Bihar and Vijayawada in Andhra Pradesh. The company currently has 36 plastic piping systems in the division and plans to add another 5 new systems, that is acoustic polypropylene pipe system in collaboration with Poloplast GmbH Austria, polyethylene gas piping system, PERT piping system, polyethylene single wall corrugated pipe, and rainwater harvesting system during the current year. Bath fitting and sanitary ware business has been now well established. Design Center at Pune is working extensively for various new SKUs. In this division, SKUs will go up from 421 number as on 31st March 2024 to over 1,000 number by end of the current year. The company is putting up PVC profile manufacturing unit with 5,000 ton annual capacity at newly acquired site at Kanpur, Bihar, along with window making at the same site and also at Kharagpur. The business of cloth laminated film and product had a nominal growth of 1% in volume terms during the year under review. The below normal and erratic rain in several parts of the country last year adversely impacted the demand for tarpaulin, resulting in degrowth in this product category. All the equipment for manufacturing cross plastic are in the final stage of installation, and the trial production is likely to commence in second quarter 2024. The company's furniture business did not show any growth in value term and a negligible growth in volume term, in line with the trend witnessed by the overall plastic furniture industry. The company's consistent business policy, intensive marketing effort, coupled with superior quality and premium product range, and its plans for increasing its coverage will ensure growth in the fiscal year 2024-25. Industrial component division did not grow due to sluggish demand for appliances white goods sector, where company has significant presence. The auto sector continue to look promising. The company expects medium and long-term scenario to remain bullish, supported by various reforms of government and upbeat in the overall economy. The material handling division grew 11% by volume and 3% in value for the year. Division expanded its range of dustbin models, with induction and roto-molded pellets are getting good growth in the business. Company, having been a trusted associated supplier to major soft beverage companies, benefited with increased demand, and the same is likely to continue. The year under review remains subdued for composite cylinder division as purchases from its major customer, Indian Oil Corporation, has not happened as projected earlier. Discussion with other oil marketing companies also continuing as they are exploring to introduce composite cylinder in their portfolio. The company continues exports to its valued customer and continues to explore newer export markets. In performance film division, persistent efforts in new industrial food application help the division in creating value-added product to its portfolio. The division issued positive feedback from its key export markets. In protective packaging division has been successful while working closely with customer end user and developing new applications for varied industries, keeping their needs in mind. New product development, adopting new technology in manufacturing, and focusing on export business is yielding positive results both in terms of growth and profitability. To meet the growth in demand of both these products, companies initiated steps to put a new plant near JNPT port. The site near JNPT port will facilitate export of protective and performance packaging products at economical cost to internal customers and will cater to increased requirement in domestic market also. This is a brief and overall summary for the quarter and year-ended reference. Thank you for your patience. Now I and my colleague, Sri P.C. Somani and Sri R.J. Sabu are available to reply various queries raised by all of you. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Also, in order that the management is able to address questions from all participants in the conference, we request participants to please limit your questions to 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Arv Jain from Nivesha Investment Advisory. Please go ahead.
Hi, sir. Congratulations on good set of numbers. Sir, my first question remains on the industry front. So, like we have been seeing from the last 1 year, the industry has been a little subdued due to overcapacity and other supply-related constraints. But, this Q4, we have really seen some good margin improvements. And going forward also, you're guiding that the demand remains resilient. So how do we see the industry in this coming year? Are the overcapacity constraints resolved and the gross margins are continuing to improve? How do we see that, sir?
What I know for industry means what? Overcapacity for what?
So the plastic industry as a whole, overcapacity in terms of the number of players who have set up plastic, PVC, PET-related plants.
Yeah, let you talk about numbers of players. In plastic industry, there are always more number of players. But even then, with more number of players, we have grown by 26% in volume overall. So what we have to comment? Please tell me. And we are planning 20% volume growth this year also.
Right, sir. So the volumes remain really good. But on the margins front, like we have seen for the last 3 quarters, the gross margins had declined to some extent. But this quarter, we see the gross margins have improved. So going forward, can we expect similar kind of margins?
It remains like that. We are forecasting this year also 15.5%.
Okay. Okay. Thank you, sir. That answers my question.
Thank you. The next question is from the line of Aditi Loharuka from CD Research Private Limited. Please go ahead.
Good evening, sir. So my question is, do you think that focusing just on the plastic piping systems business will help the company achieve greater cost optimization and higher market share?
Sorry, say it again.
Do you think that focusing just on the plastic piping systems business will help the company achieve greater cost optimization and higher market share?
I believe that our market share has gone up last year.
Yes, sir, but the plastic piping segment has contributed around 70% in the of your revenue. So how do you see that?
We are investing more monies in the segment where the growth opportunities are there. In plastic piping, we feel has immense opportunities available for next 5 years plus. So more and more investment is being made to that segment. And obviously, it will contribute similar way.
And besides the cost optimization which you are referring to, that will continue because more and more capex is being planned in plastic piping segment, and the economies of scale of operation will obviously be in place because of the more operations.
Okay, sir. Thank you.
Thank you. The next question is from Shubham Agarwal from Axis Capital. Please go ahead.
Hi, congrats for the good set of numbers, sir. Just a few questions from my side. Just wanted to know what's your capacity as of FY24 end in each of the segments, and how will it look like given the capacity expansion in FY25 and in FY26 end? That's the first question.
Our installed capacities, the nameplate capacities at 31st March 24, all put together of 950,000 metric ton, which consists of 739,000 of plastic piping, 90,000 metric ton of industrial product, 93,000 of packaging products, and 29,000 of consumer products. The way we are planning our capex and the likely to be in place by end of FY25, the capacities are likely to be in the range of 10,50,000. About 1 lakh ton capacity will get increased with the capex which will come into production during the current year. The majority of the capex will be in plastic piping. So we are expecting the present capacity of 740,000 of plastic piping will go up to 835,000 metric ton.
Okay, sir. FY26 also, do you have a number, or is it yet to be planned? The capex?
Yet to be planned. It's too early.
Okay. And sir, this includes the JNPT capex that you're planning or not? Because I'm not sure if the capex number already includes that.
JNPT is for protective packaging where the volumes are not come because it's a very lightweight material. So volume comes majorly from the plastic piping. The protective packaging products does not generate the volume.
The new plant what we are going to put up in JNPT may not go in production also in this year. It requires some time now. This is the investment we will be making, which will be in operation fully in 25-26.
Okay, sir. So the capex that you've told, the total capex for FY25, the commitment, so that doesn't include JNPT. Got it. JNPT is yet to be planned for this particular.
We plan only capex. The commitment was around 500 crore beginning of the year.
Okay, 500 crore is included.
500 crore was a capex already committed, which could not fructify in the year 23-24, which we expect to fructify in the current year.
Okay, so that answers my capex question. I'll just move to the second question now, which is if you can give us a broad sense that how much did Nal Se Jal contribute in FY24? Is it are we expecting some kind of a decline in that? And secondly, I think you mentioned that you expect that deficit to be covered by plastic pipe supply to oil and gas segment. So, sir, if you can also give us a sense that how big is the oil and gas segment requirement for plastic pipes going to be, and what is it going to be used for? It's going to be used for gas distribution, is it?
Gas distribution will still start this year.
Yeah. But going forward, yes, that is going to be a big business.
Yes, it's going to be a business, but after all, we are now getting our product qualified at Eastern India also. Today we are qualified only in Western zone. So we hope that we will start getting business now with our product qualified from, we can supply from Gadegaon, that is Western zone. Because Eastern zone, the freight become too high. So for that, we are putting our capacity at Eastern zone also at Kharagpur. It will be operational by November, October this year. Our business plan, we are announcing business plan and investment what we are planning to make.
Sir, I just wanted to understand how big is this opportunity, the oil and gas segment?
Just maybe 200,000 ton annual, overall in the country.
And is there any big player already, or it's like a new segment that you are doing?
There are big players.
Okay, sir. Got it, sir. Got the second thing. And just the last one, sir, so plastic pipes, you're expecting a 25% volume growth in FY25. Can you just guide which are the key things that are driving this strong growth in plastic pipes?
By adding more system, adding more SKUs in existing 36 system, and putting more capacity at several locations, and expanding capacity in our existing plant. So many factors are being done. Many markets where we are not present, we are establishing new distributor links, increasing our number of retailers working with the company. All round marketing effort made. In several areas, still we don't have representative. We are now going on appointing every month. So business will go on growing. But our company will go on growing.
Got it, sir. So, just a related question, that the 5 new plastic piping systems that you're adding right now, is it expected to increase your addressable market significantly from where you are currently?
It will definitely increase the market. No? When today we are doing nothing, then new product we add, they will definitely add to our business. Significantly, how can they do it? They are coming in this year only.
No,
significantly, they will do over the period.
Right. So my question was, the 5 new systems, are they expected to increase your addressable market significantly? Like, will it increase by 20% or 30%?
No, personally, I can't say, but that's why we are investing. After all, we must get return on the investment.
Okay, sir. Got it. Thank you. This was all from my side. I'll join the queue if there are more.
Thank you. Next question is from Dhanan Bagrodia from ASK Investment. Please go ahead.
Hi, sir. Congratulations on a fantastic set of results again. Just wanted to ask you, for plastic pipes now, a lot of growth has been coming from Jal Se Nal. Do we see what has happened in the last 5 years in terms of volumes play out in the next 5 years, or are we reaching the end of this Jal Se Nal program?
We believe Jal will be over in next 2 years.
Okay. So then what would be the next leg after that?
Gas system.
Sorry?
Gas pipe system. Gas pipe.
Okay.
Gas pipe and smart city system. We make so many systems different.
Okay, but would that also be showing similar volumes as what we've seen in the last 5 years?
Okay, so they may be bigger volume also. I can't say today.
Okay, so that's even a bigger opportunity, but right now we don't know yet.
Okay, there are opportunities. There are opportunities for business.
Okay, fine. Thank you, sir. Congratulations on fantastic set of numbers again.
Thank you. The next question is from Venkatesh Balasubramaniam from Axis Capital. Please go ahead.
Yeah, thank you for the opportunity. Is it possible to quantify if there was any inventory loss or gain in the fourth quarter, and similarly for the full year of FY24?
For full year, there was a loss of around 50 crore rupees. The stock which was valued as on 31st March 2023 has been valued at 51 crore lower on 31st March 2024.
Okay.
So obviously no gain. The inventory has been valued at 51 crore, lower than what it was on 31st March 2023.
Okay. Understood. Now, again, going back to this Nal Se Jal, I think someone else also asked before me, how much did Nal Se Jal contribute to your revenues in financial year 24?
Quite substantial. We had in polythene pipe business, we sold more than 50,000 tons last year, and it was a 90% growth of previous year. So around 25,000 tons extra we sold due to Nal Se Jal scheme.
Okay. So is it like almost 1,000 crores of revenues have come from Nal Se Jal, 1,000 to 1,200 crores?
55,000 cannot make 1,000 crores. It can make maybe 400 crores.
How much? Can you please repeat? 400 crores.
It can be 400 crores. 400.
Okay. Now, do you expect this to come off next year, or it can remain at similar levels for the next couple of years?
Definitely, still so many states, so many houses are still connected.
Okay. Lastly, you are growing at a fantastic pace, 25%. I mean, your growth is industry leading. I don't think anyone else is growing at your pace. What is the pace at which the industry would have grown in plastic pipes this year, and who are the companies who might be losing market share?
Industry is grown maybe 10%. I don't know. We definitely grown quite well.
Is it from what you are doing, 25? I don't think the industry is growing at this kind of pace. Correct?
In plastic piping system,
yeah.
Grown by how much percentage? 13%. As industry grown by 13%. Right? Industry has grown by volume.
Yeah.
13.79%.
Okay, 13.79%. Okay.
13.79% by volume. The industry in the country is grown in plastic pipe system.
Okay.
And our company grew by 33%.
Okay. Understood. Thanks a lot. Thank you. All the very best.
Thank you. Next question is from Ritesh Shah from Investec. Please go ahead.
Hi, sir. Thanks for the opportunity, sir. I'll just continue on the prior question. Sir, you indicated 50,000 tons of volumes from Nal Se Jal for this year, which is roughly 10%. So should we assume...
I got 25,000 tons last year. Last year we sold 500,000 tons. So it come to 5%.
It was 25,000 tons, not 50,000 tons.
Overall 5% of turnover. Last year we sold 500,000 tons of plastic pipe system. So 25,000 tons of 5 ton is 5%.
Correct. And sir, how should we look at this number for next fiscal? Will we do better than this? Like, do we already have an order book? Because in one of the earlier calls, you had indicated that we had an order book of 480 crores, which would be over next 12 months. So I just wanted an update on that number, on what that order book position we have right now, and how much visibility do we have for next year?
What question? What is your question? I'm not clear what you ask. What question you are asking? I'm not clear what you want to know.
Yeah. Sir, you had, in one of the earlier calls, you had indicated that we have a 480 crore order book with visibility on supplying on
Maharashtra Jal Nigam, the period is up to 2025. So they go on placing orders based on the inquiry demand they get from the Jila Parishad. So now, whenever the demand comes, we will go and supply to them.
Is it possible for you to quantify what is the current order book position? I could not comprehend, sir, what you said.
For Maharashtra Jal Nigam, there is no order pending today.
Okay. And sir, from the eastern states?
Which whole the country we are supplying, dear friend.
Okay. Sir, will we have an aggregate number?
Aggregate number, the orders are executed monthly. No? There is no they're coming for the year. We go and getting order monthly from the contractor and we go and supplying monthly. We got 8 locations we make polythene pipe. 8 locations in the country.
Okay, sir. Sir, my second question was, can you please explain us what does PERT piping system mean? And you also indicated molded clean gas piping system. What are the end applications specifically on PERT piping system? What is the market that we are looking to cater, and why are we getting into this? Thank you.
PERT system is required for hot water carrying. We are supplying polypropylene system for hot water. We are supplying CPV system for hot water. We are supplying PEX pipe system for hot water. This is a fourth system for carrying hot water, PERT. It is a new material, polyethylene jet temperature, PERT system. So every system has got an advantage. Based on the recommendation of the plumbing consultant, we are able to supply any type of system required to carry hot water, company equipped to supply. That is one system we are going to make. Secondly, we are going to make polypropylene acoustic pipe system. Presently, we are making PVC acoustic piping system, where the decibel level of the water coming at 4 liters per second, maybe 22, here it may go down to below 15 decibel. So it is more noise dampening system, which is more demanded now for many villas and many large, many high-rise buildings. So we are coming with a system, and we are very optimistic of getting good growth in that business. And then third is polyethylene gas piping system. So there are various systems we are launching, for which we have identified markets, and we see good potential in growth in this business. As a system supplier in the country, we want to offer as many systems as required by the economy.
Sure, sir. Thank you so much. Very helpful. All the very best.
Thank you. Next question is from Sonali Salgaonkar from Jefferies. Please go ahead.
So thank you for the opportunity and congratulations on a great set of numbers. So I have only one question. What is your outlook on PVC prices? I understand it's very difficult to predict, but just from your side, how do you think PVC prices will pan out in the next year? And also, is there any update on the Red Sea conflict and the higher logistical cost?
So, to forecast the price for the full year is very difficult. As we stated in our opening remarks, the world economy is going in a slow mode, so we do not see possibility of prices to go up. PVC is a building material, and building industry is in doldrum in China. But the big factor is that local makers have initiated with the government of India to put anti-dumping duty on PVC from certain countries. Now, there is a long-drawn process. We can't forecast when the anti-dumping duty, if any, is going to be imposed. We have no idea. If suppose no anti-dumping duty is imposed, then price will remain at this level. If anti-dumping duty are imposed, suppose on the worst case by November, December, then thereafter prices may go up also.
I understand. And any updates on the disruption from the Red Sea issue?
Disruption?
Red Sea issue.
Red Sea, no issue. No issue. Only the consignment is a 20 days letter from USA. But there is no issue. The freight might have gone up by $10, but we have not seen any increase in our acquisition cost because of that. We are not disrupted.
Got it, sir. Very helpful. Thank you and all the best.
Thank you very much.
Thank you. The next question is from Praveen Sahai from Prabhudas Lilladher. Please go ahead.
Yeah, hi sir. Thank you for taking my question and many congratulations on good set of numbers. First question is related to your capex of 1,500 odd crore. Can you give some timeline? How much is for this FY25 and how much 26 capex planned for?
No, the whole capex, you see, out of 1,500 crore, close to 500 crore capex has already been committed last year, which will get certified during the course of the current year. In the new capex, which we will be committing this year, 60 to 70% of the capex will be fructified because the brownfield expansion will not take that much time. Time takes the only phase of greenfield when we are looking for Bihar, Andhra Pradesh or JNPT
And Kanpur.
and Kanpur, Dehat, where we have to build the buildings, infrastructure. So the capex is committed, but the production will come only in the next financial year, 25-26.
Okay. So that's what now my question is, how much actually 60-70% of a 1,500 crore is committed for 25, right, sir?
Correct.
Okay. Second question is, sir.
Answer. Our installed capacities will go up by about 1 lakh ton per annum by end of FY25.
Right, sir. Right. Yeah. So now the next question is, sir, related to the. Can you give some color on the last year contribution in your piping segment from the real estate and infra and agri?
No, we can't have any separation. How much real estate, how much infra, how much is not possible, please.
Or not even with the LTT pipe growth or
also for housing, so we can't give a proper. We cannot be 100% sure that this has gone into agriculture, not gone into housing. It can go in housing also. Same percent pipe are used in borewell also, percent pipe are used in the field also. We cannot say correctly how much has gone into infra. We cannot say precisely.
Okay, got it, sir. Thank you. All the best.
Thank you. Next question is from Manish Mahawar from Antique Stock Broking. Please go ahead.
Yeah, congratulations for good set of numbers, sir. Only one question, sir. In terms of industry growth, you are given a piping volume grew by 13.79%. What was our market share in the FY24?
Sorry?
What would be our market share, or possibly can you give a piping volume of an industry for FY24?
Maybe around 12%.
12%. And sir, what's your expectation for the next year in terms of industry growth?
Our growth 25%. Next year industry growth, I think we have to get figure from the producer of raw material. But should be definitely 12% to our mind.
Okay. 12%, and we will grow at a 25%, you said. Okay. Understood, sir.
25%.
Okay, understood, sir. That's from my side. Thank you. All the best, sir.
Thank you. Next question is from Sneha Talreja from Nuvama. Please go ahead.
Sir, congratulations on great set of numbers. And congratulations on great outlook too. Just a couple of questions from my end. What is the what is your outlook on the OPVC segment? How much is the tonnage that we are adding there, and what kind of growth that we can see? And is this the segment only working towards the government projects? Some sense here would be helpful.
OPVC, there is no capacity with us. We have only one plant which cannot produce more than 2,500 tons a year. And no plant is going to come this year to start. The supply of the equipment are too much delayed. So market can grow based on the supply of equipments. There is one very established supplier. He is from Spain and he has got huge order book. So we have got nothing to say, not more capacity we can supply. We can only say we will supply 2,200 tons on this year. This is the only capacity we have got today.
Understood, sir. So secondly, on the export opportunity, you mentioned that, there are export opportunities in your other division like packaging and all. What do you have to say about export opportunity in the plastic pipe space? Is it something that you're seeing, or is it something that could be, increasing going ahead?
We are exporting plastic piping. We are working more intensely to work more in export market. But today, more opportunities are there in protective packaging division and performance packaging division in export. Because they are not much freight intensive. Plastic pipe is a very freight intensive item. When we export plastic pipe, we are shipping air.
Understood, sir. Understood. Thanks a lot, sir, and all the very best.
Thank you. Next question is from Keshav Lahoti from HDFC Securities. Please go ahead.
Hello. Hi. Thank you for the opportunity. So what I understand, in FY24, Jal Se Jeevan Mission contributed 400 crore revenue and 25,000 was the volume. What was the similar number in FY23?
FY23 started. I don't usually with me. It was quite low number. I don't have a number. I said this is additional, we got the business. There was a number, but this is 25,000 we said which additional.
Okay. So 25,000 is additional sale over FY23. What was the total sale?
Total sale of this HDP pipe was around 45,000 ton.
Okay.
We have 25,000 ton additional. Balance we are supplying so many other applications.
Okay.
We make HDP pipe for sprinkler system. We make for HDP for various irrigation activity for borewell also. So our HDP pipe and we supply double wall corrugated polythene pipe also, which goes into housing. So we make varieties of HDP pipe system.
Okay. Got it. And how is the margin in this segment? Is it ideally subpar versus other segments?
Small margin. Very small margin. If we get satisfaction only, we are giving quality product to the country.
Understood. Something like 5 to 6% is a fair assumption?
I don't say. I say small margin.
Okay. Got it. No issues. And on the expansion plan, as you have said, you will add almost 1 lakh capacity on pipe side. So where this capacity will be added and what will be the size of the capacity, and is it possible to give bifurcation quarter-wise?
Like when we get quarter, and we don't know when the machine will be received. Every quarter we can go and tell you how much capacity we could add in every quarter. Every quarter end we tell you, at the end of the quarter, how much capacity we could add out to 100,000 tons.
Okay. Understood. So what we can see, your fixed expense, that is employee and other expenses, all have increased by more than 20% year on year. We can't see any operating leverage gains. So why is the reason for sharp increase?
I'm sorry to interrupt, but the line for the management has dropped. Please stay connected while we reconnect the management. Thank you for patiently holding your lines. The line for the management is reconnected. Over to you, sir.
Okay, we are available.
I'll repeat my question. So the question is, we can see your other expenses have increased by 31% year on year. Employee have also increased by 24%. So in spite, doing such high volume, the operating leverage gain part is missing. So why is there sharp increase?
You see, most of the expenses are driven by the volume. Your employee cost or the labor cost is driven by volume. Your power cost is driven by volume. Your freight cost is driven by volume. So the fixed costs are not increasing that way. And if you look at overall, the other expenses, now we are looking excluding, well, our employee cost does not include labor charges, what we pay to the contract workers. It is forming part of the other expenses.
Right.
Which again driven by volume only. So when we have a 26% volume growth, so naturally, one is annual division in the minimum wages, in the number of manpower increase. Both will get factored.
Okay, got it. One last question from my side. How has been the CPVC prices in Q4?
CPVC prices.
CPVC prices are under pressure only.
So what would that number of correction?
They are not able to drop price too much. It may be dropped by 4-5 rupees a kilo. But they are under pressure because there is too much capacity. CPVC market is not there much. This is a plumbing segment. Last year the country grown maybe around 13% on CPVC by volume. And too many players have come.
Right.
Capacity of CPVC is aging. But they can't sell below the cost, so they are maybe reducing their production. But that is their problem. We have no problem to get CPVC aging nowadays.
Okay. Like what we have seen, CPVC prices has been, declining month after month. So is it at its bottom, or you think there is more further scope left for correction? And
Which one bottom?
Quantify the
CPVC price. I'm not a producer of CPVC. I can't say.
So I mean the CPVC pipes.
CPVC pipe, we have dropped the price accordingly. No, you can't increase the demand. It is only going into plumbing application. So we are keeping very small margin only. Material available adequate nowadays.
Okay. Understood. Got it. That's it from my side. Thank you.
Thank you. Next question is from Mihir Damania from Ambit Asset Management. Please go ahead.
Yeah. Hi, sir. My first question is of the 1,500 crores committed CapEx, how much have you allocated to the piping system?
What? To piping system. What? CapEx. Out of 1,500 crore, minimum of 1,000 crore you can say.
Around 1,000 crores. Okay. And my second question is, amongst your key end user segments, basically agri, infra, and real estate, which segment do you think will grow the fastest in FY25?
No, the housing will go on growing. Agriculture also may go on growing, but agriculture is a senior business. Infra actually depend on the state government budgets. We can't forecast for them.
Got it. So you believe real estate will grow the fastest in FY25?
Real estate booming, very well. Real estate growing nicely.
Okay. Thank you.
Thank you. Next question is from Vipul Kumar Shah from Sumangal Investment. Please go ahead.
Hi, sir. What percentage of our volume in piping segment comes from oil and gas, and where do you see it in next 2-3 years, sir?
Which sector? Piping.
Oil and gas.
Oil and gas.
No, gas, as I told you, it will be around 200,000 ton business annually. We are still not a player. This our now getting approval in various locations. Then we can talk more intelligently. Overall market in India is 200,000 ton.
And our share is?
Our share is zero.
Zero. Oh.
So we just came in this business this year.
Okay. So do we expect to? Do we expect to see a sizable market share gain there?
I don't know the meaning of sizable, but definitely we get market share. We supply quality product, full system we will supply. We are not only going to supply pipe, we will supply fitting. Not only from one location, we will supply from 3 locations. So we will be economical by freight element also, and we will be offering full range.
Okay, sir. Thank you.
Thank you. Before we take the next question, we'd like to request participants to please limit your questions to one per participant. The next question is from Nikhil Agarwal from VT Capital. Please go ahead.
Good evening, sir, and thank you for the opportunity. Sir, just wanted to know, if you could quantify your regional presence in terms of the piping demand volumes that come in. If you could quantify the mix.
Regional data we don't have here. We don't publish regional data. Regional presence in piping.
We are present throughout the country.
Okay. And sir, one more question. Just wanted to understand, with more CPVC capacities coming in this year, do you expect prices to be under pressure for the remaining part of the year as well?
I think they dropped the price substantially. I can't say about them whether they want to further drop. I have no idea. At the higher level, the price has been dropped. Accordingly, we dropped the price of CPVC system quite substantially. Now, whether they will drop further, I can't say. Their economy.
Okay.
When they become very uneconomical, people have tendency to grow the capacity.
Okay. And just a clarification, your market share you said at 12 is 12%.
That market size of CPVC last year is a growth of 13%.
Total. We are talking of total plastic
market size was 13%.
In the piping segment, what is your market share currently?
Market size.
Of the Indian market, total market, we are about close to 12 to 30%.
Okay. Got it. Thank you so much. That's it from me.
Thank you. Next question is from Utkarsh Naponi from BOB Capital. Please go ahead.
Yes, hi. Good evening, sir. So my question is regarding the pipe segment. So, sir, if we see our pipe plant operated at a decade high level at 75% in FY24 versus like we have operated at around 65 to 68% over the past 1 decade period. And now, sir, you are guiding that we are targeting to grow our pipe volume by 25% in FY25, whereas our pipe capacity is only expected to grow by 13% in FY25. So, sir, just wanted to understand whether we are likely to face any capacity constraint to reach our targeted volume growth of 25% in FY25.
More than 100,000 tons this year. And after all, we sold this year 500,000 tons. We are doing 25%, we are 125,000. So we don't see any constraint of that. If we are constrained, we'll go on putting more machine now. We have so many locations now to make piping system.
Okay.
No problem. There is no supply constraint. No supply constraint, no raw material constraint, no power constraint, nothing.
Okay. And sir, second question is on the margin side. If I see there has been a steep increase in our pipe sales volume by 30% on a quarter-on-quarter basis, and the resin prices were also quite stable in the current March quarter versus it was quite unfavorable in previous December quarter. But then also our pipe segment margin has slightly gone down on a Q-on-Q basis. Sir, can you please explain the reason for that?
Last year, comparison, January, March, there was inventory gain. Between 70 to 80 crore rupees. If you compare last year, then the margin will come down. Otherwise, we are quite happy with the margin.
Thank you. Before we take the next question, a reminder to participants to please limit your questions to one per participant so that the management is able to address questions from all participants in the conference. We take the next question from Aditya from Securities Investment Management. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So this strong volume growth which we are seeing in the pipes division, so have there been any particular geographies which have outperformed, or the volume growth has been broad-based across geographies?
Throughout the country. We are present throughout the country. We are seeing volume growth throughout the country.
But are there any particular geographies which have grown faster, way faster than other geographies?
For us, all the market has grown nicely.
Okay, sir. And so my last question was, our growth in the piping industry has been twice the rate of at what industry has grown. So have we taken any price cuts to accelerate our volumes?
No, we are introducing more system, more product in the existing system. We are making more location, more capacity. So customers are very kind on us.
Thank you. Next question is from Vineet Shankar from JM Financial. Please go ahead.
Hi, sir. Thank you for the opportunity. I just wanted to ask, what is the volume growth guidance for the segment excluding the pipes?
Can you repeat your question, please?
Yeah, just can you give me the volume growth guidance for segment excluding pipes, plastic pipe division excluding?
Excluding pipe, you want to what is it?
You see, when we are saying 20% growth for the company, it means we are talking of about 125,000 metric ton for the company as a whole. And maximum it is coming from piping. So other than piping, it will be a single digit, about 10% growth you can say.
So which will be the fastest growing segment?
Pardon?
Besides piping, which will be the fastest growing segment?
No, not getting your voice.
Please be near to the phone, na?
Yeah, 1 year.
Yeah, yes, sir. So besides piping, which will be the fastest growing segment, like among remaining three?
So you see, ultimately, furniture, we don't expect any growth. So it's the packaging and industrial. The material handling product or the packaging product.
Thank you. Next question is from Praveen Sahai from Prabhudas Lilladher. Please go ahead.
Yeah, sir. Just one clarification. Can you give the capacity for the consumer product segment?
29,000 metric ton.
Oh, and how much is the increase the way forward here?
No, way forward, we are not planning any increase in capacity because we already have a sufficient capacity. We invest only in the new design of the molds, furniture molds or the almirah molds.
We do not anticipate volume growth in this business.
Besides, the focus is on the furniture side. Furniture side is more on the value-added furniture.
Premium product.
Premium product.
Okay.
Just the same. Capital employed are better actually in furniture.
Because why I had asked, you had a plan for a 100,000 for a entire capacity. Out of that, 86, I think, 86,000 for a pipe. Rest also you have.
Packaging will be investing money. Performing packaging film will be investing money. Piping division will be investing money.
Okay, not in the industrial and the consumer. Okay, thank you, sir.
Thank you. Next question is from Shubham Thorat from Perpetual Capital Advisors. Please go ahead.
Hi, sir. Just wanted to understand the pricing environment around our product portfolio.
Raw material price is going to remain in the same level. There is range bound, $50 plus $50 minus. So we will maintain the same way price trend. We do not expect any upside on the raw material price.
Okay, got it, sir. Thank you.
Thank you. Next question is from Akash from UTI Mutual Fund. Please go ahead.
Yeah, hi. Am I audible?
Audible.
Yes. Hi, sir. Thank you for the opportunity. Sir, just wanted to ask, in packaging segment, we have seen EBIT margin improving from 7-8% last year to 13% previous quarter and 18% this quarter. Sir, going forward, what is the sustainable level of margins that we see in packaging segment?
When we make an average, we hope to maintain or improve the average margin back to last year. But we are improving so many product range also, and we are going more and more in export markets.
Sure, sir. So if we try to quantify, would it be close to similar to current quarter's margin, close to 18%?
I talk annual margin.
Sir, okay. So annual margin would be okay. And sir, we have seen realization growth in this segment, specifically packaging segment. So you believe that the current quarter's realization would continue, or we are expecting even higher realization growth?
When we are saying annual, then please stay with one sentence what we told you.
Right. Sure, sir. Thank you.
As we are going into more and more export potential, our export business goes up because we are exporting some very specialized product, and we see good growth opportunity. We will go on remaining in more and more export side. That's why we are putting plant close to the port so that we can supply to our customers economical cost.
Thank you. Next question is from Venkatesh Balasubramaniam from Axis Capital. Please go ahead.
Yeah, thank you for the opportunity again. Now, during the course of the year, at different points, you have shared, for example, first quarter you had an inventory loss of 40 crores. Second quarter there was no inventory loss. Third quarter you had a 15 crore inventory loss. Based on the full year inventory loss of 50 crores, it looks like you had a small inventory gain in the fourth quarter. Now, based on whatever numbers you have shared, if I actually calculate the EBITDA per kg across the quarters, it looks like there is a gradual fall which is happening. In the sense that FY23, this number was 27 rupees per kg. This has gone to 24 or 25 rupees in the first half of this year. Fourth quarter, this is at around 22.8. So it looks like there is a constant fall in the EBITDA per kg. Now, if you adjust for the inventory gains and inventory losses, now, what exactly is this? Is this a conscious strategy on your part that you're okay with a slightly less EBITDA per kg, but you want a higher volume growth and you want to gain market share? Is this a conscious choice on your part?
EBITDA per kg must depend on the product mix what we sell in a quarter. When we sell only more and more pipe only, be it PVC pipe or polyethylene pipe, EBITDA will come down. Overall, last year we are happy that we earned 21 rupees kilo and 50 crore was their loss in inventory. So if I had no loss on the inventory, I could have earned 22 rupees per kilo per kilo per ton last year. 32 rupees kilo. So if you calculate it, we have earned nearly 1,050 crore rupees. And if I add further 50 crore rupees, then it becomes 22 rupees per kilo. And depending on product mix, we are not supplying only value-added item, we are supplying pipe also, so to make it visible to the customer. And pipes are low added value business.
Okay. Now, just following up on the same thing, normally first quarter is the quarter for the agri pipes. Now, agri pipes normally make the lowest margin. But surprisingly, in the current year, your EBITDA per kg is higher in the first quarter, adjusted for the inventory loss. You made almost 24 rupees, whereas the fourth quarter it is lower. And the reason we are asking you is when we are...
What is showing today, in from April,
he's talking April 23.
No relevance. They may be due to water reason. Today I can't talk about April, March, April, June, Q2, Q3, I can't talk today. What was the reason I can't talk today?
Okay. No, the reason being that when we are talking to dealers in the market, they are telling that Supreme Industries has been cutting prices and growing volumes. This is something which we are hearing. Now, any kind of light you can throw on the same?
If dealers are talking like that, I have no idea. We have not to go on cutting prices. We want to earn money, justify the investment.
Okay.
The investing money, it must get the return.
Okay. Thank you very much. All the very best. Thank you.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to the management team for closing comments.
Thank you very much for all the analytic questions. Me and Sri Somani and Sri Sabu, we are very thankful for very intelligent questions raised by all our investor partners. We thank them very much. Please.
Thank you. Thank you.
Thank you.
We close the meeting.
Thank you very much. On behalf of DAM Capital Advisors Limited, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.
Thank you. Okay.